Good morning, or should I say good afternoon, and welcome to our latest IT Job Watch webinar, where we're going to be looking at the latest trends happening in the IT job market. I'm James Chaplin, the CEO of Vacancysoft, and I'm just going to be talking you through the latest data that we've been seeing. Um, just before we go any further, for people who are less familiar with us, in terms of the data we'll be showcasing, the data is sourced from company websites as opposed to job boards. We are monitoring the company websites for change. We're identifying new vacancies as they're posted, and we're eliminating the duplicates. For each vacancy, we are assigning up to 20 data points, which means that we can then create really, really highly granular analysis by jobs, skills, functions, etc. Um, all the data is then powered into our analytics platform, and it's actually from the analytics platform we created the charts, which we'll be visualizing today under the presentation. We've been going since 2006. We've got lovely clients, thank you clients. They include companies like Page, Hayes, Adecco, Robert Walters, and others. We've been around a while. So if you don't use us, by all means, just have a chat with one of our sales team and find out how we can help you. But otherwise, just moving on. Looking at the agenda for today, I'm going to be looking quickly at the overall macroeconomic piece. Recruitment, it's always worth remembering recruitment is tidal. And so what I mean by that is that when the water levels go up, everyone makes money, and when it comes down, well, it's a tougher market. So we're going to be having a look at what the macroeconomic data suggests, also in light of the political changes that have been happening in the last month. We've had the small matter of a budget and a US election, which are both um, interesting, for want of a better phrase. We're going to look at then from there, like the IT. We're going to look at the doing IT benchmarking, looking at corporate recruiter vacancies. We're going to look at what's happening in London versus the region, skills and demand, companies to watch. We're just going to go through it all. So just getting into the meat of it, just to talk you through the macroeconomic data. So I'm an economist. Well, I graduated Manchester University economics. So just to kind of decipher the data, just try and explain a little bit about what this means. What Where the UK is at is that, and this is the most important thing I can explain to you, and this is why there's so much pressure on this budget, is that we need to have GDP growth of 2.5% in order so that our debt levels do not increase as a function of GDP. And at the moment, we're on track for 1.2%, and that's before we get any headwinds coming out from the budget or from Trump, etc. Unemployment is, relatively low by UK standards. The same with inflation. But then once again, the concerns are that with this budget, it's going to apply significant inflationary pressure. Um, Interest rates have come down recently, but not just in the UK, but also in the US and the Eurozone. Actually, it was a full sweep they came down by. But once again, now looking at it, there's kind of a concern, and before I go any further, we just need to talk about this budget. Um, for people on this call, the recruitment industry are very much the weather vane. I think you guys see which way the weather's going, and you spot it earlier than anybody else. And I think that with this budget, what it's going to mean is that the specifically retail, consumer goods and services, and hospitality are going to be under significant pressure. And the reason is because they are industries which have low margins. And so, because they have low margins and they have a low wage economy model, they're going to be hit with a combination of the minimum wage being increased. They're going to be hit having the NICS threshold right dropping to £5,000, and then also contributions on top. Certain sectors like hospitality and retail, which also rely heavily on part-time work, are going to be disproportionately impacted. And there are some studies coming out which are suggesting that the cost of part-time workers is going to increase by as much as 74%. Now, the Retail Institute have come out and said, hang on, this doesn't make sense. And they're tasking the government and saying, we're just going to have to cut headcount, cut jobs. And the reason this matters is obviously if you look at how disposable incomes work, if people who are in the low wage economy suddenly don't have money, well, when they have the low wage economy and they have a job, they spend everything, right? There's no savings there. So there's nothing being taken out of the economy. So when they have a low wage economy and they lose their job, all that happens is that they have less money and it's the state that's paying through benefits. So there's a real issue there. And without wanting to be too political, it's not clear that the government have priced in the second order consequences. I've read some articles which have talked about the government just saying, well, business is just going to have to pay. And the reality is that business doesn't have to pay. It can just choose to have fewer people. So what I do expect to see out of a function of the budget is that we're going to see a drive towards higher levels of automation. We're going to see redundancies, and we are going to see a move to greater levels of offshoring as businesses try to return their budgets to the profitability levels they saw before. And I think the recruitment industry actually is going to be equally impacted. I spoke to one of our clients the other day, 40 people, and they're saying, right, well, out the blue, we've got to increase our costs by, we've got an increase of costs of over £100,000 next year that we weren't factoring. So it's sizable. It's a real issue. But look, I'm moving on past that. Then there's because there's so much going on before I go into the actual data from our side. Just looking at the Trump phenomenon as well. If you're looking at what to expect from Trump, well, the euro is likely to get under massive pressure. And the reason for that is that, Germany is already in recession. They've had their government collapse just now and their elections in February. Their whole economic model, which was about cheap energy from Russia and then exporting to China and the US, the whole trifecta is under pressure. And they are on the verge of closing factories for the first time in Germany. It's a major deal. Trump is also talking about putting on tariffs onto Mexico. And why does that matter? Well, 77%, I think, of all the cars manufactured in Mexico are exported into the USA. And the German car companies have massive plants in Mexico. So, Euro is going to see a big hit. The UK overall has a relatively net neutral trade position with the US. So don't think the UK is going to be that impacted. There'll be winners and losers, like always, but it's not going to be a massive issue. But for the UK's position then with the euro, it's going to open up lots and lots of dimensions because I do think that there will be an opportunity to engage with the EU in a way where we haven't been able to up to now. But let's see. Let's see. I'm going to move on into data. That's a quick economic and political overview. And look, just starting with the the jobs, and it's just straight up benchmarking. And what we can see straight away is that the month on month has actually gone up. So we can see this in the chart that there are more vacancies in October for IT than there were last month, but we're still trending down on last year. And I put on here the 2019 totals as well, but because actually it's worth understanding on the comparison that 2019 obviously being the last year where we had realistic data before the pandemic, it's also significantly down on then as well. Now, there have been some bright spots, right? I mean, if you look at the VC and the PE funding, well, that's increased. And the second half, this year has actually seen a significant uplift in VC and PE funding compared to last year. FinTech has had some massive gains, biotech as well. But equally, when you see other industries like retail, e-commerce under pressure, those are massive stores of jobs in IT as well. So where one goes up, the other one goes down. So it's very much, and to give you guys a metaphor, if you just put money on a tracker on a stock exchange, it will just average out the performance of everything. The real way to make money is on stock picking. And I would say something similar here. If you want to understand what's going on with IT jobs and where to work the opportunities are, you kind of want to look past the macro headline and try and sector pick. Which sectors do we think are going to perform well? I've done here the VC funding, and you can see that Q2 was the record. Q3 has dropped off. This capital gains tax increase in the budget could be a constraint here. It's hard to say exactly what's going to happen with this one. I think everyone, but what I'd expect is personally is that Q4 is going to be muted, whilst everyone just analyzes this budget and just thinks it through. And then if we're lucky, there'll be a pickup in Q1 because I don't think that Rachel Reeves is ideologically trying to annoy financial services and vested interest. There, she's just made a gambit about where she can make money from. But I think that if you start to see the financial flows and the capital flows come down, there may be some amendments to policy. Let's just say amendments, fine tuning, nothing, no U turns. That'd be politically disastrous. But you might see some fine tuning, which make it which act to boost VC and PE funding. Um, Corporate recruitment vacancies. I think this is always an interesting one to look at. And the main reason being is that when companies are in growth and when companies are expanding, the first thing they do is they expand their corporate and talent management teams. And so the fact that Q3 has been, a pretty buoyant quarter is a positive. Obviously, we have seen a bit of a slowdown in October. It's hard to say. I mean, it's best understood quarterly, this one. Hard to say how Q4 is going to play out. But if I had to put my money on it, I would say might be a small shrinkage in Q4 compared to Q3. Unfortunately, I don't know if it will drop as low as Q2 dropped. That really was a low mark, as you can see, but might be somewhere in between the two. Now, looking at job flow, talked earlier about winners and losers. Well, there have definitely been some regions that have been winning and some regions that have been losing. There has generally been a consolidation towards London. That is clear. And you can just see that in terms of how there's been a greater concentration of jobs in the capital. And over the last few years, it's just been increasing. And in contrast, there's been downward pressure on the north. Now it's worth, and the reason I pulled this data back to 2019 is because it's worth understanding that for the north, actually they're outperforming where they were pre-pandemic anyway. So there has been a structural shift to the north. The question therefore then is how can is it possible for them to get back to the 23 levels of 18%? How do they push it higher from there? With the other regions, you look at it and say, well, the South generally has been the big loser. That's where you've seen the big structural shift away from the South. These are kinds of the macro trends that we're seeing. Just looking at the skills and demands and looking at where we're seeing the increase. I think just compared to last month, actually, where we've seen the increase here is actually in development and engineering, and so where what that's had an uptick in the last month. It is obviously choppy, but it's worth understanding in relative terms which areas are outperforming in the last month their annual average, and which areas are underperforming. With that in mind, it's interesting to see IT security picking up as well. IT management roles have been dropping off, and the same applies with some of the other areas, like in terms of what's it called? IT management and infrastructure as well has dipped a bit as well. We can say if anybody's interested in seeing the month-on-month changes, we can send you a full data analysis of month-to-month job flows, so you can actually see how it's changed over time as well. This is just a quick summary for the presentation. But look, and here what you can see is that you can see how the October percentage in October has picked up against the year, but worth remembering that last month actually it was significantly lower as well. So this is generally speaking, it's picking up. It's also interesting for us to see that the data roles data scientist roles are picking up as well, which is interesting because that had dipped off previously too. But other areas of data, like data analysis and data engineering, are below the annual average. Looking at the sector focus, um, where I think this is quite interesting is that it's the fact that the London-based sectors are really doing well. We talked earlier about consumer goods and services being in trouble. Well, you can see it there. Like 3.5% of the whole job flow is consumer goods and services, and that's against 6% on the year. In contrast, banking, insurance, professional services are on the up, as is tech. So, once again, if we're talking about winners and losers, for recruiters who are focusing on consumer goods and services and retail and hospitality, get out. I mean, that if I can give you one nugget, if you've got people who are on desks there, look at what they're doing. Just be very careful because I don't see any good things coming out of there. In contrast, tech is picking up, finance is picking up. These are areas which are performing better. Or I haven't mentioned it here, but the other one which is set to pick up is going to be the real estate and construction industry as the plans for expanding the housing stock start to materialize. That will manifest straight into job flow across all areas, including IT. Now, moving on to the companies to watch. These are the largest companies. So, if you're looking at how this is ranked, this is the top 20 companies in the UK by IT vacancies. Apologies, the labelings there should be October. That's my mistake. And then this is the October vacancies that they then published. And so, what you can then see is straight away that even if, and this is what I talk about in terms of lumpiness. So if you're looking at where the lumpiness happens straight away, what you can see is that companies like EPAM are surging right now. So, if you haven't, and you can always use this kind of data to engage with clients in a way where when you talk to them when they're surging, because by talking to them when they're surging, that's when they're most likely to have a problem filling their vacancies and they're most going to be appreciative of having maybe an extra supplier come in and help them. Realistically, we can do this kind of analysis not just for the top 20 companies, but for any combination and basket companies. So if you've got a hit list of 50 companies that you're really going after, what we can do is we can build a bespoke list for you and show you, okay, for the top 50 companies in your BD list, which ones are surging in vacancies right now, so that you can go and talk to them and say, hey, how are you? We can see you're really busy at the moment and we'd like to help. And what we found from working with our other clients in this way is this has been a very effective way for them of streamlining their business development and focus and being able to focus on it, on the companies that are most likely to need their help. The same applies, as you see, I've done a filter here for small to medium sized businesses, and you can see the same kind of thing applies. You can see straight away bites, massive surge there. That's 30% of their annualized job flow in 1 month, and so forth. Um, so, just in terms of the next, I would say um, looking ahead, the macroeconomic indicators, I would say, are positive. We're seeing interest rates come down, but the big question is going to be what happens next and how do the markets react to this budget. Um, Now, it's worth remembering, and I'm going to say this, that the reason why the government have put in this budget ultimately is because they want to have a growth budget. Now, because it's the Labour Party as opposed to the Conservative Party, it's a transformation. Certain sectors are going to be big winners. Clean tech is going to be a big winner. Construction is going to be a big winner. Industrial engineering is going to be a big winner when you look at what's going on at Atom Valley. Other areas are going to be big winners. But then there are going to be areas that are losers: retail, hospitality. So pick your sectors and focus on the markets which are going to be busy and scale back from the ones which are going to be quiet, would be ultimately my key takeaway. Anyway, look, I hope you've enjoyed today. That's just a quick snapshot of everything that we're seeing at the moment. If you would like to have a further chat with us, we can create a bespoke presentation, a workshop for you, and we can run through your particular market segment. So if you're a fintech recruiter, we can talk about fintech. If you're, focused on IT security, we can look at IT security. If you're looking at folks more on, say, Java roles, we can do some analysis around Java. Whatever the area is you're really interested in, we can do the full analysis for you. And then also, just importantly, our primary use case actually is lead generation in terms of providing feeds of data for consultants so that they can be on the money every day, contacting companies which are hiring right now. Our pricing is, as you can see, we can start it quite inexpensively, £125 a month just for a single user with a basic package. Anyway, once again, I'm going to say, and before I go, do sign up for our weekly newsletter. That's where we just talk about a lot of the trends that we're seeing, and we can keep you informed of all the kind of macroeconomic trends that are happening. The one we've done this week actually is quite interesting. It's looking at the trend between London and New York and the banking sector, and how New York is now really overtaking London for the first time in terms of job flow. It's quite interesting. But other we also then feature reports which we do with our industry partners, with organizations such as AppSco, Robert Walters, Morgan McKinley, CPL, and others. So if you'd like to know more, you can get we'll be sending out a copy of the slide deck, and you can find out more information from there. But anyway, that's me for today. Thank you very much for everyone who's attended this session. I hope you found it interesting, and we look forward to seeing you next time. Thanks very much.